Hey everybody, it's Pete Carmasino here at Chaikin Analytics. This is our weekly video power feed here at Chaikin Analytics. We kind of do a stock of the day, things that are going on, and maybe a headline name that's making some news. And that stock today is Nike, and obviously it's down about 20% or so as I record. It might be more or less by the time you see this video. The idea here is to kind of show you where we saw the changes in Nike, where you would have avoided it. Now, Nike's been an amazing brand since the 70s. Awesome book, The Shoe Dog, unbelievable, right? An incredible story, right? It's been, one of my favorite sort of, athletic wear from a footwear standpoint, but that's grown into all kinds of different opportunities, right? It's gone really to that athleisure, but it's still hardcore athletes using, a lot of the sports equipment and obviously clothing that Nike represents and sells. Now, I'll tell you this, they might have been one of my first pair of cool sneakers, but they're not my last. There are different brands out there now that I would think in my age group, people are starting to wear more of and less of Nike. I don't know if that's part of it, but it may be a change in trend. And let me tell you about that trend change. The stock had its own trend change twice, one from a relative strength standpoint back in December at around 107, just after the Christmas holiday and before the year ended in 2023. There's around 107 or so. We had something called a relative strength change. That stock at that point breaking down current levels of 76. That's about a 29 to 30% sell-off from that level. The second chance was back in March of this year when we downgraded it to a bearish. That's really an all-out avoid, no need to be involved in the name. And that stock from that level was around 98 and change, almost 99. That's another 23% down move from those levels. So there's two opportunities, two different alerts in the system telling you avoid names in downtrends. And I'm going to bring something up at the end of the video because stocks and downtrends, typically can continue, but something also happens in those downtrends, and it happens a lot. Let's look at the chart and look at those two areas and what the chart looked like and how it materialized. You would have avoided this name. Hopefully you're not involved in it, but if you were, there's a system here that would have alerted you to get away from it earlier on. All right, folks, here we are at the chart of Nike, symbols NKE, if you didn't know that. You can see it's down about 19% as I record here. The stock's been in a downtrend for the better part of 2024. It had to move higher into the holidays, and typically of, these retail, textile, apparel, luxury type names, have that around the Christmas holidays. We get it. But earnings also came out at that point, and things weren't looking good at that point. Now, what happened is we had a relative strength change right after the Christmas holidays, somewhere around the 27th or so. You can see it right here, right on the chart. And that's really the first alert. As I said, it's around 107 or so, and the stock has moved down, and that represents about a 29% drop on the first alert. Now, the second alert came somewhere around the week of March 18th. At the end of that, on that Friday, right? You can see, let's see, right on March 18th, we started to see a downgrade in the name. And that went from a neutral rating down to a bearish one. Now, that's typically an avoid, and you don't want to be involved. In the neutral zone, you can maybe hope for, trend changes or a recovery or maybe a regression to the mean or something. You can find some positive there. But on a downgrade into the bearish territory, things are kind of, all bets are off. And this is what I'm saying. And these names that have these downtrends, they can continue, and they typically end, not all the time, but sometimes you see this happen where the capitulation is well after the downtrend has been established. And that's really why catching falling knives, bottom fishing, these are dangerous activities. I know there's valuation folks out there, and you're saying, well, it's worth this and book values that. That's great. But price action is ruling the roost. You've got to be careful. Even if all your math adds up and the chart looks like this, it's an avoid. And that's really the point I wanted to make here today, folks. You can see these downtrends. It happens all the time. People kind of like, well, I like it at 100. Maybe I'll buy it at 80. Well, you want to bottom fish. That's dangerous. Okay. Catching a falling knife is also dangerous. That's kind of the same activity here. We're trying to find names, especially like Nike. It's an attractive company. Why not? Right? Why wouldn't you want to buy it cheaper? Well, today you're getting it really on sale. And that's really not where you want to be if you're already in it. Now, if you're not, I'm not sure what to do with this, but I would tell you this. Right now, the way this name looks is obviously going to need to consolidate and improve itself to move higher. But that's what my point is. You had two opportunities here on our system. One was a relative strength change. The second was the power gauge downgrade. And that's kind of validating the trend. You want to avoid those names, not chase them on the downside. And one more thing before I let you go here. Mark Chaikin, the founder of Chaikin Analytics, actually just put out a new video. I think you really are going to want to watch it. He talks about what's happening here in the markets, what he sees happening in the rest of the year, and about the broadening out of the market. So if you go to you'll see the slide at the end of this video. It's called markupdate.com. It's MARC update.com. Go check it out. I think you'll really enjoy the message that Mark has there. It's certainly something you don't want to miss.